Let me make sure I get on. Boom. What's happening, YouTube? What's happening, Zoom? What's happening everywhere? Testing out a new app. It's called StreamYard. Just multiple streaming platforms at the same time. Very interesting. Kind of working with it, trying to figure out what it is. I'm going to keep the lo-fi going. I'm going to turn it down. So this is a call with myself and my boy. I like big pips. Let me get him up here. So if you are on the actual, if you're on the stream on YouTube, you'll see both of us. If you're on Zoom, you're only seeing the you're right now only seeing the chart. So well. So we're gonna go over some charts. We're gonna go over some analysis. We're gonna do some stuff. We're gonna have some fun, and then make sure everything that we do here is not financial advice. This is for educational and entertainment purposes only. If you are here right now, it's because we want you to be here, or because you want to be here. I'm happy that you're here. So we're gonna go over Bitcoin. We're gonna go over some altcoins, and then I'm gonna pass on to Jay. He's gonna go over some technical analysis on some other stuff as well. And main goal is just to go over charts because we're all Pipaholics here. All right, Pipaholics Anonymous. Let's get started. All right, first things first. Boom, boom, boom. Share my screen. Boom. Ooh. So let's look at Bitcoin. Currently tanking, getting ready to wipe out everyone. Actually, you know what? I dropped a couple charts on my trading view. I know people are asking, how do you get to your trading view? All you gotta do is just go into trading view, and you go into you can go follow people. You just go to profile. When you go to profile, you can actually, people have profiles. So like I have a profile on trading view. So any charts that I drop, one of my goals this year is to be accountable to my charts and accountable to people, like not just saying that things are happening, but marking it up and then putting it out there. So you're going to see more charts from me on TradingView than anything else. Ooh, that's very red. It's coming into my zone. So let's talk about Bitcoin and what's currently going on in the market. So I have one chart that I'm looking for. I've been talking about this with the flat wave correction, the running flat correction. Let's go to the 3-day. And I was expecting what happened in Bitcoin to kind of happen. That's not it. There's one chart I'm looking for. Don't you hate when you have so many charts? I have like every chart of Bitcoin open, but there's only one chart that actually has what I want on it, which is a previous TA. I should really mark these charts. I thought I did, though. That's the funny thing. Might be this one. Nope. What the? Okay, here it is. Okay, so we have a running flat correction. So we talked about this before, where there's a 3-wave corrective series. Generally speaking, in this move, generally speaking, Bitcoin will generally, like in terms of like, this is Elliott wave, it shouldn't get below this point right here, right? And this is just this isn't me saying this. This is based off of the analysis. Okay, so one thing you have to understand when you're trading with analysis, your goal is not to add any feelings or thoughts towards it. It's to trade your analysis, right? That's it. So when I see this market and I'm looking at it and I see it go high, low, comes down, this is when people got very bearish, right? Everyone was talking about $12,000 Bitcoin. Potentially we're going to go down to 12,000, right? There we go. And what ended up happening? We ended up bouncing up. Came high, higher low, high. And now we're here. Now, everyone, this is one place where I was like, okay, we sweep these lows. This is where I'm going to start getting cautious. We did sweep the lows. I'm still cautious. But after reading up on what a running flat correction was, I was like, I'm not as cautious anymore. Okay? I'm still cautious. Like, let's be completely honest here. Because at the end of the day, if this is the TA, this is what's going to end up happening, we should bounce up and start clearing these highs, right? So this is a potential swing I was looking at. This isn't actually going to end up happening. I don't know what's going to happen. So when I was looking at it, this should be doing exactly what it's doing right now, which is a 0 to A to B, B to C correction, 5 waves down. Are we done the 5th wave? That's the real question. And there's only one way to really find that out. We have to make a higher low, right? And once you make some sort of higher low, then you can anticipate that the market will start going up. So when we drop down to the 4 hour, right? So we're at the highest time frame right now. And I sent this out on my trading view. And this is what I was looking for, which is the higher low. Now, the reason I was looking for this is because I was actually looking for it to come down and sweep and clear, at least go to this point in the liquidity. So right here, you see where come right over here and turn around. Now, the reason why I'm looking for that to happen, because at the end of the day, that's my analysis, right? You just trade your analysis. Now, what happens if we cannot hold this support? Well, then it's going to start going down. What happens if we can't hold this support? Well, then it's going to start going down. Can we come down to an 886? Yeah. So utilizing the Fibonacci, which is a measuring tool, here is the 886 right over here. Could we come all the way down to there? Yeah. And if we do, then you're looking for a bounce. If it doesn't bounce off of any of these key institutional zones, these key zones, then we are not making a higher low. We are about to make a lower low. And this is where, like, it's either going to go up or it's going to go down. And anytime, normally when I always bet on Bitcoin, when Bitcoin's in these places where it's supposed to go up or down, I oftentimes will choose the upside because that's what Bitcoin does. And I like to believe the fact that that's what it continually will do. So when I'm looking at Bitcoin, where it's currently at, for me, I would be looking at this box right over here, right? And this box is very important. Now, this red box is also very important. I'm going to kind of talk about that because this is where a resistance level is from all the way back into last year, right? So here's the next interesting thing about the running flat correction is that this has been pretty much doing this exact same thing for the last year, which is a corrective wave accumulation cycle. So now picture it like this, okay? This is how I see it. Imagine if this has been a 1-year accumulation cycle, right? And it kind of feels like that because think about it like this. We haven't really done anything. Like right here, came down, came up, right back here. And this is like 6 months. Like think about this. It took 6 months to go up. If we got to November, it took roughly about 3 months to come down. At some point, we need to now make our way up and just blow past everything. Like this is the one thing you have to, like for me, I'm like at some point we just need to blow past everything or start making our way down. Like it needs to make some sort of decision, right? These are decision areas. So if we make our way down, there are imbalances still below. So I'm going to show you something called the BTC1. This is based off the CME group. So one thing that made me very bullish about what just happened was this gap. This was in the CME. So this gap, and I measure all the gaps. I have to erase them. So that's something I'm going to be doing is cleaning up my charts. It's just so good. At least when you leave stuff on your charts, it's like reminders of like areas that you were. So this gap was right here. And ain't that something that we came back in and filled that gap, right? So if we came back in and filled the gap, that means this did exactly what it was sent out to do. That was the assignment, right? So at some point, we have to make a higher low. Now, if we don't make a higher low, what can you anticipate? Well, you can anticipate for the market to further drop. Here's 26, 24. Here's another gap. And then here's another gap, 19, 18. And there's another gap, 9,000. So am I saying Bitcoin's going to head down to 9,000 or 20,000? No. But I'm leaving that up there because of the fact that it could happen. And at the end of the day, if it does happen, that changes the fundamental ways that I think about this bull run, right? And I've been saying this for a long time. Nothing has happened differently that I haven't been able to see. And I'm not saying that from a point of view, like, I'm not trying to be cocky or anything like, oh, I know everything. I'm just saying it from a point of view. When it needs to make a higher low, it made a higher low. When it needs to make a higher low, it made a higher low. Did it look scary at the time? Heck yeah, that was scary. I remember at certain points I was on a call like this with Jason and like saying like it's either gonna go up from here or it's gonna clap everybody. At this point, who cares? This is kind of where we're at right now. Now the fundamental reason why is like I said, it's the 886 zone. So this is the last support zone that we have. If we drop below this, then guess what? Pew! Now could it come back up and start coming up and make its way higher? I mean, yeah, it could. Every chart I have marked up. Looking for one clean one. This one should be good. Or this is the battle of the wedges. I don't know. Okay, so I also have, yeah, it is the battle of the wedges. Okay, so this was another chart I dropped on TradingView, which is called the battle of the wedges. And we can see right here, and I'm going to kind of break this down what happened. So we can see that the bullish wedge happened here. Market came down, came back up. Okay, bullish wedge happened here. Market comes up, breaks out. So here we go. Here's a bullish wedge. Now, the question now B is, are we going to come out of it? So are we going to come out on top? I was looking for the bounce off here. We got the bounce off here. So are we going to continue going up? Or are we just going to blow? Everyone stops. So for me, personally speaking, I'm favoring the bulls for Bitcoin rather than the bears, because the fact that I'm looking for, if everyone's saying the same thing, which is that it's going to go down further, I'm anticipating that the market will go up, because this is like observe the masses, do the opposite. Observe the masses, do the opposite. This is what I've always been learned this, where it's observe the fat masses, do the opposite. So when the masses say we're going down, we're going down, we're going down, what I'm looking for is for us to start heading up and start clearing the pockets of liquidity. So where are these pockets of liquidity? Okay, so I'm gonna put some money signs there just so we can see it. Ooh, what's happening? There's a lot of interface happening with TradingView. Okay, there we go. I can't erase this one, so I'm gonna erase. I know this one's nothing, so I'm gonna make this one. Yeah, this is nothing. Okay, so if there's something here, I'm erasing it. Okay, so if we're gonna start heading up, we can already see. Let's go on the weekly first. So we can already see. Oh wow, jeez, everything. I'm gonna get rid of everything here. I'm okay with getting rid of everything here. When you have so many charts on Bitcoin marked up, you're just like, okay, this is why. All right, so there's liquidity here. There's liquidity here. Okay, so we are all over the liquidity on both spots. Jeez, that's really late. So we're all over the liquidity on both spots. Okay, now if this is going to come down lower, we can see that there's an imbalance in the market right here. There's an imbalance right over there. Just tons of imbalances, right? So there's a lot of room for the downside. Now, based off the technology of Bitcoin and based off the adoption of Bitcoin, if you actually study the rest of the chart, like even going further back, there's just tons of imbalances. So what that tells me is that we leave imbalances all the time on Bitcoin. And looking for imbalances towards the downside, generally speaking, they're good, but there is a next move. So what I'm looking for is to blow these stops, which is the trend line, right? What do we got? Trend line. Trend line. There we go. So we got a trend line right here. Let's form it properly. Let's go to the line chart. Boom. We got a nice, good old trend line right here. So what do you think everyone's trying to do right now? Well, anyone that's a trend line trader, right? What are they looking for? Well, I'm just going to sell it as soon as it gets up to here. Just sell it as soon as it gets up there. I'm just going to keep on selling it. Because why? The trend is your friend to the end, right? Well, we're getting close to the end of this trend because there's another trend. So which trend are you following, right? Are you going to follow the bearish trend or are you going to follow the bullish trend? 3 points. 1, 2, 3. 1, 2, 3. Right? So for me, I'm looking at this. Now, could it do both? Of course it could do both. It can come down, sweep all this, and then go. Right? And that's a very plausible thing because you have to go to the higher time frames. and it's all about where it ends on higher time frames, not on lower time frames. So this could still come down and come back up and still close here and still be bullish. And that's like the scenario that's very like, come close this gap. And if that happens, then you know that was smart money, right? And at that point, like, unless you're sitting in front of your computer and watching that happen, you just have to be on the sidelines being like, have your heart beating like, oh my gosh, what just happened? My portfolio just dropped even more. Your portfolio dropped. You should be liquidity pool in a liquidity pool. Just saying. All right, so if we're gonna turn around here, automatically based off the analysis, what I'm looking for is for us to kind of clear these highs, an easy trade, and I'm already in this, which is off the 886. So this is now we're gonna talk about getting entries for this. My stop loss was like not 2,000 pips; it was like 200 pips. I'm not even trying to cap with that. I literally was on smaller time frames because this is weekly. It's not really going to make sense from the weekly, but that's what I'm personally looking for. I looked at it and I said this, and the funny thing is I caught this, and then I sold it. Like I was like, okay, we're good, and I got rid of it over here. This is what happened next. So I have that feeling here where I'm like, all right, well, if it turns around and it turns around for the good, then we're breaking all this, and then all this liquidity. So liquidity, all these are stop losses. Stop losses for shorts, right? 1 second, let me get the boom. Stop losses for shorts. There we go. Stop losses for shorts. So all this is stop losses for shorts. So for me, there is a possibility where we come down and take out this and like really take this out. But I would say there's probably more money shorting the market than there is longing the market right now. Because longing the market would equal to the fact that people are on margin trades. Like normally in terms of long versus short, it's all about margin trades. If someone's holding the market, just holding it in their thing, it doesn't matter how low you bring this. Most hodlers, most people that got into Bitcoin this year got in somewhere up here, right? So you're either in profit or you're not. Anyone that got in here in 2020, you're still in profit. And this was kind of comical because if you were in 2020 and you were like, oh my gosh, my portfolio, it's like, what are you talking about? Like, I'm still up a lot just because you got in at a bottom. And this is where, like, I can't see it coming back down and clearing it. Now, if we can't finish off this bearish bullish cycle, then you best believe we're coming back down and you're looking for an 88% retracement. I just don't think we're there at that point yet. I do think that there is still one more pew and then clear everything. And then at that point, that's what I'm looking for. Even down, if we're going to head down lower, I'd rather them come up higher, take out at least the liquidity up here, get everyone really bullish, and fail, and then come down. Like that's normally how smart money moves, and that's normally how market makers will move. They'll normally take out liquidity, then come down, because this liquidity is still going to be here. Whether they take it out now or they take it out later, this liquidity will always be here. It's this liquidity. Do you want to wait a year to take this out, or 2 years? Or do you want to take it out now, right? You're already here. So if it's already done everything it needs to do, which is take out right here, this imbalance on the weekly, you can see this is actually how I got this trade, looking at this imbalance on the weekly. And I'm like, huh, once it broke past here, I was like, right, well, here's the imbalance on the weekly. This is where I'm looking for the trade. Confluent, 886. All right, we're good. Bet, let's take it. And that is how I came up with the conclusion that I'm taking this trade. So like with Bitcoin, generally speaking, you're looking for, right now I'm looking for upside and I'm looking for to take all this out. Now, I haven't looked at any altcoins. Actually, that's a lie. I looked at a couple altcoins. I dropped them on my Instagram. But I haven't looked at any altcoin charts. I've just been looking at like fundamental stuff and all that other stuff. So I'm going to look at a couple of the altcoins and I'm going to pass it off to Jay. 1 sec. Oh yeah. Let's see. Going, zoom. All right, so a couple altcoins we talked about, like right now everything's on sale. Like, don't look at it and be like, oh my gosh, it's a bloodbath. It is a bloodbath, but this is that saying, when there's blood on the street, you buy, even when it's your own. Like, this is the time that makes the most sense. This is what blood on the street looks like. Blood on the street. Like, this is what it looks like. When the market looks like this is when you're just like, well, heck. Like, I'm doubling up on positions because I'm like, well, what else am I going to do, right? Like, at the end of the day, I'm already in these positions. What else am I going to do? For anyone that's like, I don't have any more money. Well, this is where you need to get more money. Where do you get money from? You take profit. Always take profit. You don't go broke by taking profit. But, like, see how the market's starting to push down? So when the market starts doing something like this is where you just have to kind of not wait. Like, so let's look at Jasmine. Okay, Jasmine is one of those coins that I like, but like, where are we going with this? And I'm pretty sure I already have this marked up. Okay, so here's 4 cents. We're currently at 4 cents. Let's get off logarithmic. So we are either going to turn around from here, which was a area that I had out for a reason. I'm pretty sure it's probably 886, 786 area. I'm pretty confident that that's what it was when I first marked it up. But like, this is your area to buy. Like, and this is what I was saying. Like, these are the times where, yeah, this is the time where you're going to buy, because this is an area, the final area of support. So the real thing when you're looking at the market, if you're going to buy it, the reason you're buying it is because it's at this final area. If it's going to go down, then heck, you're going to end up losing money anyways. And this is like a horrible thing to say, but like, understand, like, this is part of investing. If it's going to turn, you have to believe your analysis. So it's either going to turn around here, or it's going to accumulate here for years. So you now have to look at it. If it's going to just accumulate here, let's just say it's just accumulating here at 4 cents, then this is an area to buy it. Well, what happens if it gets down to 3 cents? Buy more. 2 cents, buy more. 1 cent, buy more. You're accumulating everything to make sure that you have more than enough, because when it does do that upward swing, you have 10, 20, 30, 40, 50,000 of these tokens. And when it gets to $1, again, right? Because it was $1. So you best believe this thing will get that to $1. So I think about it like this: it's undervalued, right? And anything that's undervalued, you look at it and say, okay, eventually it will come back up. So when it gets to $1 and you got, let's say, 60,000 of them, well, you got $60,000. And you don't believe in it, so who cares? Take the 60K, put it into Ethereum, put it into Bitcoin, put it in anything else. But this is how you utilize these types of plays. You don't wait for it to go to the, like, what's the moon? Well, the moon is just to get back up here, for me. And if we're in an accumulation cycle, and this is like multi-year accumulation, I'm just taking from a multi-year accumulation, then for me, I would just start accumulating. And this would be one of the ones I'm accumulating, because I'll just buy, and just keep on buying until one day you start breaking, right? When it's ready, it will break. You'll know when it's ready, because all of a sudden you'll be like, I'm rich. And you'll be running around, tapping your feet, doing all that stuff. A couple of V-Chain's another one. I just had it and disappeared. I'm on V-Chain. Okay. Here, V-Chain's another one. Great project, great coin. It's currently at an 886 area, right? So right now, what this tells me about the market and what's going on is that the market is getting ready to reverse, because it's all in the same area, right? So it's either getting ready to reverse or it's getting ready to sweep. So if it's going to reverse, well, this is the area where it would reverse from. And this goes back into like what happened with the interest rate and everything. Like I was talking to Jay earlier, and we were saying, I was telling him, like, the fact that they didn't raise the interest rates today, which I didn't think they were going to raise it anyways, because they announced and said we're not raising the interest rates until March. So today was just like a theater, and it was the excuse to make markets move, right? Like news is the excuse to make markets move. At the end of the day, it's like why would they move for this? This is one of those high end coins, YFI 886. So you're seeing something here. All the coins are all getting. It doesn't measure all of them. They're all in the same places. They're all in that 886 level. So because they're all in the 886 level, this is the time to buy, right? Like if you were waiting for a sign to start buying cryptocurrency, this would be it. And you could be like, Manny, what happens if it heads lower? It heads lower, right? But generally speaking, this is the time that you would generally buy this. So make sense? So we got Rose. Rose is another one. Did I mention Rose? I think I mentioned Rose. Rose is another one that's at 39 cents. We were able to get that at $3 cents. So it's currently at 29 cents. And there's a lot of different cryptos. So I would suggest, okay? And I'm gonna pass it off to Jay because he's back. There we go. Go to CoinGecko. CoinGecko. I'm spelling this horribly wrong. So I only check Instagram. CoinGecko. Okay. Oh, $1,200 gone. Eventually it has to come down, right? Like that's the one thing. Eventually it has to come down. All right, so go to CoinGecko, and like if you're looking for, let's say for instance, anything under $1, I dropped this list on Instagram. Like I'm personally not going deep into CoinGecko into like the 700s, but like there's people who go up to the 700s and thousands. I'm more of a 1 to 300 type of person. Top 300 is good enough for me. Like if it's good enough to be top 300, it's good enough for me. There's over 9,000 different cryptocurrencies. I'm not trying to get all of them. I just want it's not Pokemon. I don't want to catch them all. Okay. So what you look at is anything underneath $1. So let's see. Where's our first one? Arwe is a good one. It's back at that entry, $28. Anything under $1. We got Cardano. Cardano's at $1 right now. Like this right here is a game changer. And the reason why, because you can take your Cardano, put it on. This is the bottom, and I'm telling you, the reason why it's the bottom, because everyone has it staked there. Like everyone that's a Cardano person, it's gonna head lower. Anything can happen, but is this the bottom? I'm pretty sure it's bottom. Let's say I'm pretty sure. But you can take your Cardano and put it on Sunday Swap, and start earning Sunday Swap and Cardano. Little tidbit. Algorand. So okay, here we go. 30% down over the last 7 days. Okay. BAT. I'm not saying to buy this because you get this for free just being on the Brave browser. But like start going on the Brave browser a lot more, and they'll send you more BAT. Right. Right now is the time for you to start streaming. Get on harder. Oasis, Rose, HBAR, Gala, 29%, 23%. Like, don't look at this as like, oh my gosh, this is the red. This is the blood on the street that we're talking about. This is it. Blood on the street. Okay? You buy, even if it's your own blood. So at this point now, and what that means is that you're not trying to time it. When you start seeing red, you start getting bullish. Once you see red for a lot, this is where you space out your buys. So this is a coin that I actually like, Harmony. And I'll talk about this one coin, and then I'm done. That's a wrap. And the reason I like this coin because DeFi Kingdom. Not even gonna lie, I like DeFi Kingdom. I like the GameFi stuff. I'm diving deeper into that. I'm on my channel. I'm on my YouTube channel talking about it. I'm following. I'm trying to figure it out. I'm moving around money. I'm on the liquidity pool. It's a DEX that interacts as a game, and it gives you the Legend of Zelda vibes. I like it. Okay, so Harmony is the one coin is sitting like this is the game is sitting on this platform. It's on this layer 2. right? It costs like 1 penny to move things around, but like look at all this time. So this is what I mean by accumulation. From 2019, so if we're heading into a bear market, let's just talk about the worst case scenario with crypto. If we're heading to a bear market, this is what a bear market looks like. $616 days of just straight buying. Don't even look at the price. Don't do anything. Just blood on the street. You're just buying. Dollar cost averaging, loading up for this. Pew! And this is the thing with cryptocurrency, okay? So I'm gonna be completely honest. It matters which one, and it doesn't matter which one. It matters which one because you can get any of these ones, and you can be like, oh, I'm this person, I'm that person. But what you want to make sure you're with the one that has a great technology. So like Algorand 1, I think Harmony 1 is going to be a big one because of the fact of what they're doing with DeFi Kingdom, and because DeFi Kingdom is built on them, and how much things that DeFi Kingdom has going on for it. I'd be looking at accumulating this. So if this was the last big low, right, there's a good chance that we come back down to 3 cents. If this is a bear market, okay, this is the worst case scenario. If we're going into a bear market, this is the worst case scenario, and then you're accumulating from there. If we're going to turn around, then this is a buy area here, right? From this level here to this level here, and I'm pretty sure if I measured on the local level, so from here to here, this would be at 886. So this is like the last form of support before we drop down. So if I'm gonna this is something I would just buy up because this has the potential to be like something like Axie Infinity. Well, the coin Jewel, which is the coin that's on Harmony, which is used for DeFi Kingdom, has the potential to be like Axie Infinity. But because so much money could funnel into something like Harmony, you can see it shoot up. It's 37% down. So do your research on it. Really good coin. I personally like it. Tokenomics is good. 13 billion. Nothing too out there. But it's just the gamify part is the part where I'm like, yeah. So I'm showing you guys the website. Okay. And you can see build on Harmony, bridge all chains. So their goal is to be interoperable. Where you can cross chain with Ethereum. So it's just smarter to build on the Harmony network because it, like I said, costs a penny to build on their network, like pennies, where you're just building and it has everything that all these other things have, except better, right? And well, this has more staked, but their gas is less. Their movement time it's like way less, 2 seconds, 6 minutes. They're actually faster than everything else. And you can see. So that I'm personally, this is where I'm going to be spending my time. Harmony, and then just some other coins I'm looking at. But because I'm really focused on DeFi Kingdom, and how much they have, how many assets they have just sitting in here, like for me, like this is kind of like where I'm going to be putting a lot of my time into, right? And you can see ecosystem partners. Remember those guys? MetaMask, Ledger, like a lot of cryptos, API 3, the Graph, like all these cryptos. And one of the reasons why, because they have so much cross-chain stuff, and their roadmap has so much stuff especially for the game itself, has a lot of stuff, but they have a lot of stuff. But I'm gonna stop sharing. Jay, what's going on?
What's up? What's up? I'm gonna flip it over here. I hope
we turn on the lo-fi. There you go.
Yeah, for sure. Can you hear me? Can you hear me?
Boom. Okay.
All right. Can you hear me loud and clear? Can you hear me? All right. Perfect.
I can hear you loud and clear.
Okay, excellent. That's what I want to hear. Okay, cool. So my name's Jason. I appreciate you guys all for being on the call. One of the cool things is that just about a year ago, I started my trading journey with Manny and through IM and kind of just getting tapped in. But, one of the cool things is that over time, you start to develop your craft. And one of the more important things is you actually develop your narrative. Okay. So the first thing I'm going to actually talk about, which is so important, is what is your narrative, right? Before you open a trade every day, you need to have a concept of what your narrative is, or you're just a wandering generality in the markets. And what do you think happens to wandering generalities in the market? They get clapped, right? So you have to understand first, more importantly than anything, in my opinion, what is the reserve currency of the world doing? Right? So I'm going to just dive right in by sharing my screen here. And you guys are going to actually see what I see going into the markets. Okay, so every day, the first step for me is, what is the DXY doing? So the DXY is the dollar index for our good old American friends to the south. I'm in Canada right now. I absolutely love Americans, but their dollar is very interesting, right? It kind of has the power to move markets. And if you're a little bit like me, if you have a currency that has the power to move markets, it kind of makes sense to follow its movements every single day. So what we're noticing here is that on a higher time frame, on a weekly time frame rather, that the DXY has been actively pushing up for the better part of the last half of the year, right? We had a huge plunge, that actually ensued all the way from the dump that happened back in March of 2020 for all of the new special variants that are out there, and different, political, let's just say political matters that happen in America. Price of the DXY tumbled, and now under new leadership, it's steadily climbing. Right? So one of the biggest things that I'm always asking myself is, as it's actually on the screen, am I a trader, or am I one that is thinking like a market maker? So the reason why I asked myself that question is very interesting. If I'm a trader, I'm essentially the sheep going to the slaughter. Market makers are looking for liquidity. They're looking for trend line traders. They're looking for people who are looking for head and shoulders and cups and handles and all of the special magical retail patterns and lines and shapes and colors that we've all grown to love. But unfortunately, those are traps. And if you're thinking like a market maker, you tend to make less mistakes in the market, and you tend to see their next move before it happens. It's kind of like 5D chess. So back in September, excuse the lag, back in September while we were consolidating, I was looking at an Elliott wave analysis, and I said, something's very interesting, right? We had made a 5-wave move to the downside, and I knew that what follows the 5-wave move to the downside was an A, B, C type of deal. And so then the question is, well, how can an A, B, C go up? Well, if there's a 5-wave down, the A, B, C can go upwards. But wouldn't you know, there's a potential, I'm not saying it's completely done, but what if the ABC to the upside has now been completed and we're now continuing on a 5-wave move? So now when we zoom out, this is where it gets kind of funky. What if, these are the questions for my narrative, what if the dollar is so bullish that in the mindset of a market maker, their goal is to clear all these highs, What if their goal is bigger than just that? What if their goal is to actually clear all of, rather, let's zoom out here. What if their goal is to actually clear out all of these imbalances? What if on a higher time frame we were getting set up for a very high time frame move where we are potentially correcting, quote unquote, to the upside? What if we were actually not in a downtrend? What if we were actually in a 5-wave up that crescendos at $1.07? And so then my mind was like, that's impossible. There's no way. But when you zoom out, there is a way. There is a way that we come into this imbalance that hasn't been filled for literally 2 decades. What if that is the target of the market makers? To clear this imbalance, to clear out the shorts that have been basically eating off of this for 20 years. What if there was a way that we wick into this, clear this, and then turn around? Then I started asking myself the question, why would market makers want to do that? Well, there's liquidity there. There's stop losses. There's billions of dollars sitting right above these wicks. Why wouldn't they? So then you have to ask yourself this question: who are the market makers? Right? I believe, definitions help us along. Market makers are the ultra wealthy, or what we would call the 1%. They're the institutions. They're the countries. They're the 8 and 9 and 10 figure traders. They are the pension funds, right? They're all the people that you read about in textbooks while you were learning trading. They're not working for you. They're working for themselves. So if indeed my narrative on a high time frame is that the DXY has some dirty work to complete on the upside, I have no interest in the downside. Because now that I've zoomed out and I saw that this is actually a 5th leg, then it gets exciting. Because then I have to ask myself questions like, what does this mean for Bitcoin? What does this mean for the metals like gold and silver? What does this mean for indices, right? So I'm going to take you through a small analysis on what I saw with regards to Bitcoin. This is on a lower time frame, just so you can see how entries work. So to Manny's point, like, this was a phenomenal entry. Full transparency, I completely missed that. But what I realized is that when I ran some fibs, this was the 1618. So I was actually expecting a strong rejection here, because usually a 1618 in an 1, 2, 3, 4, 5, this is a 5-wave sequence, even on a small time frame, will generally correct between a 1618 and a 188. And so when I saw that wick rejection, I proceeded to sell this down, as you don't want to catch, a wave when it's already halfway up. You got to wait for a retracement. So I sold this down, and then something very interesting happened, is that price never actually came down to fill the imbalance that it made. It actually just continued to go higher. So going back to narrative, everybody's entitled to their own narrative. My narrative is that the DXY is going to continue to push up. And as a result, while the DXY is pushing up, that's going to create an avenue or an excuse, right, for the market makers to sweep the lows. Kind of in line with Manny's second idea, right? So I want to take you through what happened here. Using Fibonacci time, I was kind of tracking what was happening. So we knew we started off here, kind of made a move. And by the way, I kind of ran high to low here from the previous major break of structure that happened last Friday. Okay. Bear with me every time we get on live. The trading view kind of slows down. So we ran the high to the low here, right? And kind of just played out very well, right? And if you remember what I said about Fibonacci in general, we can generally look for major reactions going into the 1618. So I found it very interesting that you could almost argue the finality of this move happened literally an hour and a half before the end of the time zone. I was literally in awe because as much as you can do your research, as any trader will say, when you actually see it happen live, it's quite interesting. Right, so we came up to, this is actually the 113, right? So I was kind of asking myself questions like, are we making a shark pattern in terms of harmonics? What are we actually doing? Was this just reaccumulation? And then they use the news as the excuse to do what? Now, this is the important thing that I want you guys to see. And this is the power of these sessions, and I hope you understand the value and the hours and months and even years that are kind of intertwined between both of our minds, and understand that you can take these concepts and use these in your trading. Like tomorrow morning, London session open. They had essentially created equal highs here. So in order to kick out the short sellers, they faked down, faked up. Now, this is where my personal trading has kind of taken off recently. I've started looking at the market completely different. I don't actually care about the move. I care about the liquidity. Remember, my narrative is I want to think like these people. Smart money is not thinking about your perfect entry. Smart money is thinking whole levels and how do we drive into the liquidity. Everybody who thought they were safe here selling got their stop losses rated, and then institutions did what? They sold. Right? So you do the move, they drive down, blow the stops of the buyers, blow the stops of the sellers, and then actually do the move that you initially intended to. Get used to that, right? So why did they go here? What is the purpose of the move? The purpose of the move was that their order block for their sell was all the way up here. And in order for them to actually enact their sell, they drove liquidity into the market, initiated a sell, and drove the market down. And in doing so, they actually ran everybody's stop. Wow, powerful, right? Now, what's even cooler is understanding what this looks like on an Elliott wave sequence, right? So we're going to actually dive into Elliott wave. It's a pretty simple concept, right? The concept is either there's 3 waves to the upside, or 2 waves to the upside and 3 down, or there's 3 waves to the upside and 2 down. So in this case, we can see that even though it's not clean, and mind you, it's not usually clean because they want you to stay confused, we had 3 pronounced waves to the upside. And now we actually had a show of weakness for those who are Wyckoff traders. you would know that a show of weakness is then followed by your last point of supply or your LPSY, right? And so like this here was the signal that, hey, we just did what? We made a lower high. And that lower high is how you can take a high probability sell, right? So everybody's kind of looking for high probability setups. Well, one of the things that I'm learning personally, in the classes that I take with a trader by the name of Jordan Morgan, is stop guessing where the top is. Wait for the show of weakness and the retracement at any prescribed fib level. Ideally, personally, I have an opinion that I love the 50% 618, but after you see that break of structure and the retracement, so we saw a break of structure, aka a liquidity run, so everybody's stop here was red. Ironically, this move here was, I believe, a 382. So when I saw it stop right on the 382, this is the power of harmonics. I saw it stop right at a fib level and accumulate. I bought and then I sold. Powerful, right? So the lower high was the sign or the clue to take a quick short. This is not something you're betting the whole farm on, but it's something that, hey, if you're looking for possibly 1,000, possibly 2,000 or 3,000 pips, this will probably play out over the course of the evening. Why is that, right? Because there is another formation that happened here on the same time frame. Something that many retail traders love. Unfortunately, it's also bearish, which is that we were actually in a rising wedge pattern. And anybody who trades for more than a 6-month period knows that as cool as a rising wedge pattern is, it has a tendency to break down, right? And when it breaks down, it's usually severe. Okay? So with that being said, what I'm looking for right now is, now that we've had the break down, okay, and then the break back up into structure, and then subsequently another break, another lower high. And so why is that important? Because now I can stack orders on the way down. If we can't make it above here, this is another time where you can add another order. So I personally already have 2 orders in, right, on multiple different platforms. Because you got to ask yourself this question. How many trades do you need to take in Forex, for example, to collect 3,000 pips? I'll wait, right? Most people will wait an entire month to collect 3,000 pips in the Forex market. In crypto, if you know what you're doing, you can do that in one night. But here is the secret. Don't be greedy, right? And I shared this on a live session. Manny and I did this a month ago. It was about a month ago. And the power of when price gets to the D point in a harmonic, when it gets into these premium levels. Let's just take out our drawings here for a second, right? Let's just imagine that this guy's not here anymore. Understand that, to Manny's credit, there are big money traders that are literally waiting for this tomorrow morning. So do you want to be the guy that's holding your short when it breaks to the upside? Or do you want to be the person that took profit just a little bit early, but retained 90% of their winnings? So personally, this is not financial advice. Do your own research. Like I always say, don't go cry to your mommy. I'm just giving you an idea. It's a trade idea. But I'm personally looking at, after we clear this and fill all of this here, this imbalance here, that strong push up, getting out at the 786. Okay? And just being happy with that, right? Because there's nothing wrong with a few thousand pips while you're sleeping. All right? So the other cool thing is when you get a higher entry, right, an important thing that we want to just share with you is that it's important to kind of close yourself off to risk. As soon as you're, personally, I like the rule of 200 pips in profit on crypto, and in Forex, maybe 20 or 30 pips. So when you're in profit, leave it that way. Set up a scenario where you can't lose. Actually, set up a scenario where even if, for example, there was a fast move to the upside, you're still going to walk away with 20 or 30 pips in profit. Set up a way that you cannot lose. You will be surprised how powerful that is for your trading psychology. So now let's zoom out. Now that we have a low time frame setup that's actually running right now, right? Again, you can do your own research, but if we can't break above this structure again, that will definitely signify a continuation of the bearish move, which is clearly their intent by breaking structure twice. Okay? Under, over, under. Yeah, they're getting ready to break all of this. Okay? So now the last but not least is what the heck is happening with Bitcoin? I play this game every single day, right? So what I like to do personally is I like to zoom out, right? So you can kind of see I have it on many different charts just for my own knowledge, right? I'm expecting it to retest the 50. And yes, I'm using a 5 minute. 5 minutes are what I use for entries. It's pretty powerful, right? You catch things a lot earlier. But this is what I'm looking at personally on a high time frame. So I personally don't like trend lines on low time frames. Let me qualify that. Low time frames for me mean anything under an hour, okay? But for me, monthly time frames are extremely powerful. So I have this idea. I actually have two ideas. So I'm going to give you the bullish and I'm going to give you the bearish because I think that's how you keep it real, right? Like we said before, we don't know the future. We just have a strategy for how we're going to mitigate it, okay? So I'll repeat that. We don't know the future, but we have a strategy to mitigate it. So the logic is that what if this was wave one and this clearing this was actually wave two? The secret with Elliott wave is 4 cannot break 2. I'll repeat that. So the secret with Elliott wave is that 4 cannot break 2. Now, some will argue that that doesn't count the wicks. I'm of the school of thought of that it doesn't necessarily count the wicks. So this is where it gets interesting. I'm neither really a bear nor a bull. I'm actually completely neutral. Where I'm at is that it's clear in their intent that they want to drive liquidity. However, I believe they still want to run the bull market. The secret is they want to clear this. And so for the first time in maybe a very long time, I believe there is a way I don't know exactly how or, on what days it's going to happen exactly. But there is a way that we can potentially close above this monthly trend line, leaving a large wick to the downside in January, open February bearish, close it extremely bullish, and end up doji, still above the trend line. So still on a high time frame, it will signal that we are in a bull market and that we are headed into the last leg, which is that extended fifth wave, which is, again, another form of Elliott wave sequence. Not all Elliott waves have the largest wave is the 2 to 3. There is an extended third leg. And in this leg, just so we're clear, wow, people have been asking for Elliott wave. We're given the value. We're given the value. So in this wave, what is so interesting is that there's actually 3 waves happening inside of it. And so what will actually happen, and I can definitely, on a sentimental level, see how this will completely fake people into thinking the bull run is done 2 or 3 times in this wave. Sorry, we're having a little bit of a lag here, guys. It's not me. It's TradingView. I personally have a theory that TradingView got hacked, but that's just my theory. All right, so yeah, so something like this playing out, I'll just leave it down here so you can, I'll just move it up. Okay, so something like this playing out. So boom, we drive into the liquidity to the downside. We somehow, right, still end these months off above that monthly trend line on a high time frame. So both the bears and the bulls and smart money are all satisfied at the same time. So what's the resolution here? The resolution is very simple. To Manny's credit, especially with altcoins, these prices are ridiculous, right? Jasmine at the price that it's at right now is absolute. I thought it was a steal at $8, right? And so I need you to understand I'm a highly logical person. I'm even even if we go down, I literally have shared this with people. Even if we go down further, the altcoins are literally a steal right now. The ones that I personally believe, if you want to wait a little bit, would be Bitcoin and ETH. Because you have to ask yourself, why is that? Remember, again, narrative. The reason why ETH and Bitcoin will be the last to kind of bleed out is because they have the most institutional investment behind them. They have the most retail investment behind them. So you're going to have to be a little bit more patient to get ETH and Bitcoin at a steal. But here's the caveat. This is where it gets really exciting. The last part is that my belief is that you won't have a lot of time in regards to that that opportunity to purchase, right? So I'm just going to kind of go into personally one of the ideas that I shared on. I shared it on TradingView a little while ago. Okay, I'm just going to pull it up here. Just one moment. Okay, so how it pretty much goes is that with regards to, can't seem to, oh, there it is. I already had the link. My apologies. So how this looks is this, right? There is another potential, and this is where I'm probably going to blow your mind. What if we were literally all just in wave one right now? And this will blow your mind, because potentially, to me, this actually makes the most sense. If we're in wave one right now, then that's why we never had a blow off top. Because all we did is we made 3 waves inside of wave one. And we're currently in the corrective phase of wave one. And when we close out at the 786, whether it's a 618 or a 786, I'm not going to fight you on that. I have my bias and I'm sticking to it because there's a lot of imbalance here. But I personally believe this is going to be a scenario similar to what happened in May and similar to what happened at the end of July, where it will be a feeding frenzy. And I believe you'll have a maximum of maybe a week to accumulate in this area, in this zone. And yes, you will be competing against institutions. Yes, you will be competing against OTC price action. And what will happen will be the biggest bounce that I believe Bitcoin's seen since, 2013, for example. And this here makes the most sense because it was always peculiar why we never had a blow off. We never had a euphoric state. We had the emotional cycle here, but we can't really say we completely had it here. It's almost as if we never had a full bull run. And this leads me to my last point, that we are potentially in an extended bull run where market makers have actually created or concocted this multi-year cycle that almost never ends. And it will appear as if the bull run's over here, but according to Fib time, I actually have that this starts turning around mid-April. And so then after we're out of this accumulation cycle, we actually start peaking into early part of 2023. And then we take a little bit of a break, and then comes retail, and then comes sovereign funds. And I mapped this out not just based on my bias, but I ran it with Fib time, which I actually ended up moving just so it was clearer. And so now I completely understand why Yassine and Kathy Woods are seeing $500,000 Bitcoin by 2030. But what's even more exciting is I'm actually seeing it based on Fib time in the next major leg up. And that would actually be going into 2024, 2025. So I say all this to say, this is accumulation time. So to Manny's point, altcoins, Bitcoin, it's time to accumulate, because anything in these zones, you're setting yourself up potentially, not promising you anything, but you're potentially setting yourself up for life. Because as you can see, price will never come back here. Similar to the fact that price will never come back to $100 Bitcoin, and price will never return to $3,000 or $4,000 Bitcoin. So I have a completely different perspective on the dip. My goal is to accumulate a Bitcoin at a price that it will never come back to. So without further ado, I'm going to throw it back to Manny. I just wanted to give you a different perspective and give you some hope, because that, to me, is exciting. All right, so Manny, you can take it away from there, brother.
Jeez, that was straight fire there. That right there, exactly what we want to do every Wednesday. We want to come on these, just drop the charts, talk about different stuff. Recordings will be dropped on YouTube. Charts will be dropped on TradingView. Make sure you're following us on TradingView. I like big pips. It pretty sure mine's the Manny Fraser. Keep it straightforward. The way you can follow on trading. I'm trying to figure out how you can follow on TradingView.
I
Actually,
think you follow ideas, actually.
you follow ideas. Okay.
Yeah.
I don't even know how to follow ideas.
I wish I knew. Well, you hit the light bulb on the right hand side, but then you have to search the person.
Well, there you go. Well, there's our names. You can find it. Yeah. So we'll figure it out by next week. Get some more stuff. We want to do this on a weekly basis. Hit you guys up. Tomorrow there is an AMA. There's an AMA tomorrow with the Crypto Club on Clubhouse. Make sure you guys are there. It's called Dungeons. It's called Dungeons? Pretty sure it's called Dungeons. Dungeons. This is me butchering AMAs. Dungeons. I just want to make sure I get this right. It is called Generative Dungeons. So just pretty much talking about different, like it's actually an NFT project that looks pretty cool. It's all puzzles and whatnot. So if you guys are free at 5 p.m. Eastern, make sure that you're on there. And with that being said, that is it for tonight. Thank you guys so much. See you guys next week. Take it easy. Peace.
All right, take care, guys.